looking at the D Street, that extended the winning run for the second consecutive week, with benchmark indices hitting fresh record highs in the week. The rally was led by moderate US and domestic inflation print, positive global markets, FII buying, and inline FOMC meeting outcome. But what more happened on the D Street? Let's go across to Ansh to get that roundup.
Well, this week Nifty touched record high level, advancing for second consecutive week. But in overall basis, if we see on chart, the Nifty stayed within a consolidation throughout the week. And this was mainly led by Shriram Finance and Ultratech. If we talk about other broad indices, the Nifty midcap touched 55,000 mark for the very first time. And this was dominantly led by Mascot Dock, whereas Nifty small cap touched 18,000 mark for the very first time. Moving on to sectoral indices, Nifty Realty was the top sectoral gainer, which also touched all-time high level, and this was mainly led by Suntech and Phoenix Mills, whereas Nifty Auto and Nifty Pharma both touched record high, advancing for second consecutive week. Nifty Energy too closed in green, advancing for second consecutive week, and this was mainly led by ONGC and BPCL. Now, if you talk about sectoral losers, the Nifty IT was the top sectoral loser, which was mainly dragged by Coforge and Infosys, whereas Nifty FMCG too closed in red. So overall, it was a positive week.
Thank you so much for that roundup on the markets and D Street, how that performed in the week. But let's move on. And India's trade deficit widened to $23.78 billion in the month of May 2024, as against just $19.1 billion in the first month of 2024-2025, that's April. While the exports rose nearly 9% from April to $38.13 billion in the month of May, imports shot up by 14.45% to a $61.91 billion. On a year-on-year basis, when you look at the exports, like I was mentioning, it was an over 9% growth. Imports registered a growth of around 7.8%. And one of the leading causes for higher trade deficit this time is the rise in oil imports of 28.1% to $19.95 billion in the month of May 2024 on a year-on-year basis. So clear that was reason behind the widening of the trade deficit data.
If you like this video, then like, share and subscribe to ET Now.